Welcome everyone, my name is Mike Hamilton. Apologies for my normal guests for not doing a video early this week. It's just taken me a long time to get back to any kind of normality after my viral infection. Anyway, so already looking in towards 2025, I'm going to start off with the dollar because I think what happens to the dollar is going to be crucial to commodities and European and US stocks. Okay, so the election results was around here, and so the dollar has popped up on the off of this support on the back of the election. So you know what, I think this has moved pretty swiftly up. Any market that moves very swiftly up tends to boomerang back down again. If I'm right and we pop back here to 103 and hold, then I would expect this to move up into next year. So what you might see is this dropping back down here as we head into the new year, and then potentially if I'm right and we hold down here at 103, then I think we can pop back up. If I look at if I measure this most recent level, yeah, that would put us at, so that I've just marked off effectively 50% of this last move. So if that holds and these ratios, these Fibonacci ratios hold, we could see a move into 111, 112 next year if that all stacks up. However, this will not stack up if we close underneath this 103. So that's the bull scenario. The bear scenario is we step down here and start closing underneath the support, pop back in there, and then we go back to 24 lows. Alright, so you've got two scenarios there. So the key to the whole story is that 103, 104 level. Okay, where does that leave the pound? So let's have a look at this one. So this dropped right off around the election results. So there's the election results there. So might well see that pop back to November 5th highs, at which point, again, if this scenario pans out, then we could see that well drop right back down again. And if we can't hold 24 lows down there at 112, 120, 113, then expect that to drop right back. In fact, let's put the ratios on that. This is the 24 range. So the bearish scenario is on the pound, is a potential move. We could end up at some stage in 25 all the way down there at 116. Okay, so bullish scenario is we hold above here at 130. So we push up, we pull back and hold, and then we go and find those levels up there. Okay, so there's your two scenarios. So again, the key is going to be this grey area. So you've got a high of 130 and a low of 108. The final one to watch, excuse me, let me just shut this alarm up, hang on. This has been a really interesting year for the pound yen. You can see how I marked this up early in the year. So I looked at this 184, 183.50 as support, and we did ping back to the 200 mark. Surprise, surprise, the big round number. These markets love big round numbers. So this one, now normally in a bull market the yen gets sold off and the carry trade comes in because the interest rates in Japan is much lower than the West. So you tend to get the pound bought and the yen sold. So this is bullish. So this 190 holds. I can see this winding back to the 2 mark and potentially going back up to 24 highs up there at 208. Again, that if we close underneath this one at this grey area here, let's get rid of this grey area. Close underneath here, and this could tip and roll over. But it's had a really bullish start to the year and just crumbled early July. But the pullback into the breakup area, so this is what I talked about before. If a market shoots up, it does have a tendency to get back to the breakout area. If that breakout area holds, then this could wind up again, and it end up going back to the to the highs up there. Okay, so bullish on the dollar, bearish on the yen. But the pound yen could benefit to the upside, and we could see pound US dollar drift lower. Okay, right. Let's look at the gold. Wow, that's a messy chart. So you can see this is a 20 and 50-day average here. So we broke down through the 50-day average on the 11th, popped back up into resistance, and then immediately shot down at this huge sell on the 25th, and any subsequent pushes up have been sold into. So it's a three-wave corrective wave pattern here. Let me get the pen. You've got a 1, 2, 3. So this is stepping up. We get a decent sell signal there. Drops, pulls back into that sell signal, and then we get the corrective wave here. So if we can't hold this and get back above this 2700, then expect this to drift lower and potentially wind all the way back to 2300 or more. Let's clear that because I've just made a complete mess of that. Alright, so this is a bull flag. Let's have a look at the ratios up here. Right, so we could come all the way back down to 2600, the ambush zone here at 2600. If 2600 holds, then expect that to wind its way up and potentially end up there at 3000. 2960 is an extension, but 3000 would be an obvious target if this can turn around and hold. Okay, so at the moment we still look lower. So unless we can turn around and end the week above 2650, all the time you're under, you've got a crossover here on the averages, couldn't get through the 50-day average, and we look as if we're even going to fail the 20-day average here and end up winding back down to 2600 or lower. Okay, so there's your sell signal. on the 31st of October, pulls back next day, drops into the following Monday, and then we start the real unwinding of the gold, which is still carrying out as we speak. Okay, right, let me just go straight into stocks. I'll talk about commodities first. Here's wheat. This is my favourite buying pattern in wheat. I'll show you why. You see this pattern repeated many times. So if you've got the trend line coming across this area here, but what I'm interested in is that point, and that point. If these three touches hold and we start to climb, then that's incredibly bullish. This is, I call this the 3T, the three touch. So as long as we stay above this, this is about $5.20, $5.30 here. If we can close above the 5.70 and subsequently close above the 6, then I can see this going on a run into next year. If we fail at 5.40, we could really tumble down and even break the 5 and come down there at 4.60. Okay, so all the time this holds, I would be a buyer of the wheat, especially if we can hold this 5.70. So any significant sell at 5.70 and obviously subsequently of that trendline support, then get out and stay out. But in the meantime, if we can close higher, I would even add on these on any pullbacks. So if that broke up into 5.80, I would buy 5.70 with a stop under there. I'm already in this anyway, but I would add here, take some off, and then add on significant pullback, and so on. What do I think it's going to, if I'm right, then, and this week actually breaks, so we start closing above $6, $6.25, $6.80, and ultimately break $7.30, I can see this getting into $8.50, $10. $8.50 up there as an extension, $8.60 is an extension, and ultimately I can see that pinging up to $10. Now, timescales, pass, I don't know. It all depends on if these steps hold and if this volume backs it up. Okay, so I'd need that to close up there with an increase in volume, and then see the volume increase on dips and so on and so forth to confirm. If we come up on low volume, then I would at the very least run my stops up and potentially take profits if I had any. Alright, so that's the reason why I like the wheat at this stage. If we see a follow through in increase in volume, let me show you an example. Yeah, we saw an increase in volume here. As that picked up, volume increased on pullbacks until we saw some lower closes, volume fell off, and then this trickled all the way back, boomerang back down to the breakup area, and even subsequently down there at 5.20. Okay, so I've got to see, so we went up on volume increase there. If we see the volume increase here, then I'm happy, and I'll be buying pullbacks and then seeing if that can wind up. That would apply to stocks or any market that's out there. Need to look at the Bitcoin. So this, you can see how I've marked this up. Let me just tidy that chart up. So if we look at this year's range, let's have a look at what happened in the early part of the year. So we were at 75,000 up there in March. If I pull that ratio back to the January 23rd buy signal, you can see 96, 97,000 was up there as an extension. Busted through the 100,000, so we now look as if, let's look at this latest range. Right, we look at the next target, assuming we can hold the 100,000, is 110, and then we've got an extension up there at 120. Right, so buying high is dangerous. So we've got a lot of support down there. We could, well, any dip, particularly in the new year, any dip all the way down there at 92, 92 is potentially to be bought. Otherwise, if we hold this 100,000, any pullback to 98, 100,000 is potentially buyable. Let's see if we can get to 110. The last time we shot up here in March, we took a long time to pull back. There's the 3-touch pattern. Back there. So breaching a 3-touch pattern is not necessarily, well, it's not a bearish signal if you close above next day. So we broke that trend line support on the 5th of August. By the close of the 6th, we were closing higher. So then subsequently that support level held down there at 53,600. And we held there in September, so from 53.5 roughly in September, here we are breaking through the 100,000 mark. You can qualify that breakout. The question is, how do you know if you've got a breakout? You know if you've got a breakout if you close above a trend line resistance, come back and test it and hold. That way you know you've got a breakout. Okay, so that pattern, there's the support pattern on at these levels down here, and this is the breakout pattern here in 25th, 26th of October. Okay, right, stocks. BT has picked up. Talked to you about 130 back there in early November. And here we are, we've just recently tested 162. Any pullback now to 150 is potentially buyable on BT. See Capita. Okay, so we had a good close on Capita yesterday. We're holding this 17 support. This Capita looks like that is capable of going back to 20 plus. So this is potentially buyable here. We've closed back above the 20-day average, above the 50%. So Capita looks a buy at 17. Prudential. This is holding up nicely. Any pullback to 645 is buyable. and if we can close above the 7, I think we can really get going on that one. At least I hope we can. So we would need to stay above that trend line and subsequently stay above 650, 670 for that to work. Right, I want to talk to you about a couple of new ones. Let's go back over some others. You guys mentioned this one to me, and this one is picking up. So there we were. This is Cousins, PZC. So we had support on April 17th at 80. Now this is very bullish. If you get a market that breaks support and then subsequently closes back above it, that to me is a very bullish signal. So we are currently 84.5. Any pullbacks to 80, 81 are viable, and ultimately we look as if we're potentially going to go back to at least £1, possibly more, if we can close above 90 in the near future. Alright, so don't chase the market. If you want to get in on this one, be patient, see if you can get a dip into 80 and get your stop underneath 75. And what other ones? Let's look at AMS. So we talked about this one. I bought this one around at the 195, popped up to 240. And we do look as if there's the 3-touch pattern. So we literally today we've touched the trend line support and closed above. So this one, AMS, Advanced Medical Solutions, looks as if that is viable at the £2 mark with stop underneath 194, with the potential to go back to £3. If that closes back under 194, leave it, because that is a potential fail signal. Talked about this one. This is direct line. So we had we shot up here on 28th of Feb, boomeranged back on the 13th of November, closed above on the 21st of November, and then we shot up on that little breakout pattern. So if you've got a structure that holds like that, potentially very bullish. The pullback area now is £2. I would not buy anywhere near those highs. I would wait for at very least a pullback to £2 if you want to get involved in that. But look at this. This is this is a 3-touch area on a horizontal level. So November last year we were down there at 152. We broke up there on the 20th of Feb, closed underneath it on the 12th of November, and immediately closed higher on the 13th of November, and then bust up on the 28th. So that's the story behind that one. So that, if I get rid of that, if I get rid of all of that, and look at this area here, you can see where the 3 touches have come from. 6th of November, 28th of Feb, and we got confirmation on the 21st of November, 4 days before, no, 7 days, 7 trading days before that broke up. Okay, right, let me show you a couple of others. Vodafone was in the news today. Yep, so this Vodafone looks like we could get back to the highs and potentially more. So look at that, we had a deep drop on the 12th, significant volume on the 13th, and here we are from that 67 closing above 71. So pull back to 70 with a stop under 69 on the Vodafone to see if that is now capable of getting a move on. Right, stocks I want to talk to you about is, keep an eye on this one. This is a rail infrastructure stock. It's RNWH, which is, can't remember the name. Look it up. So we got all this support down here at 986. If we start closing above the £10 mark, I would start getting involved with this already. However, I think the main pullback area is 950. If we come down to 950 on volume, start seeing some higher volumes on that level, then I will get in this and see if we can get back to 1150 plus. My target will be 13 on that RNWH. The other one I'm looking at is GGP. This is a cheapie. I would look for a pullback on 7 on this. If we get 7, I would then look to see if we can claw its way back to 12 on this GGP. I think it's Greatland Gold. Okay, the other one. What's this talk to you about? Oh yeah, this is another one I mentioned recently. Is this the right stock? Yeah. These guys have 25% of a multi-billion-dollar airport catering business. Talk to you about how this was working down here. So look at this, we're seeing that we break down lower on the 20th, close higher on the 21st, seeing this pattern so often, and here we are shooting up on earnings. So we had earnings on the 3rd of December and that popped it up. So now any pullback to that earnings low 162 is buyable. Oops, didn't mean to do that. Okay, that's it. Hope that helps. Be careful out there, and I'll update you next week. Thanks, bye.